Maybe you've heard about secured and unsecured loans. What is the real difference? Because when you go to a lender,
they'll tell you, this loan is secured. You are safe.
and then you go,
Thanks, that is perfect. And life is rosy forever after.
right? Is it? Right? Because most lenders would tell you that there is a myth about that secured and unsecured loan thing. It's like a gray area. And that is important. Imagine if you do not know about that myth and you go willy-nilly signing business loans, secured or unsecured. That is not good. Do not imagine it. You'll know it by the end of this video. Let's get into it. Now, a question for you. Would funding help your business? Most importantly, would you be able to make more money with funding? Imagine if within 5 minutes you can apply for funding and then you get consultation regarding what is your best route for funding. Then you get exposed to more than 85 lenders and you actually get funded. Do not imagine it anymore. Just go to Zoryn.com. And also I put the link for you below to apply. It's a 5-minute funding application. First, secured means what it means. It is secured by something. This thing is a collateral. The type of collateral that we can have are real estate, cars, a stock portfolio, equipment, etc., etc. So the loan is secured against that asset. Therefore, if you default, that lender can just go and seize your asset and he can recoup the money. Whereas when it is unsecured, there is no collateral. They only rely on your promise to pay back. It's your word. And for them to recoup their money, they need to go to court. So because of that, there are advantages when it comes to a secured loan by a collateral. Number one advantage is that secured loans tend to have a lower interest rate because of that collateral. Now, the second advantage is that you can borrow more with a collateral. So you can get a lot more money when it is a secured loan. And third advantage is that you can get approved easier with a collateral because of the collateral. Now, is the issue where the myth starts. You see, with an unsecured loan, you have to put, not every time, with an unsecured loan, you have to put what they call a personal guarantee. And that is important. So at the end of the day, they can come after your assets, your property, your savings. They can garnish your wages. They can come after your stock portfolio, basically everything that you have. But they need to go to court first. Whereas with a secured loan with a collateral, they can just come and seize it, right? Whereas this one, they have to go to court. But however, when they go to court, it can be worse for you. You see, when they use the court to come after you, it can get a bit worse. They need to file that, those things takes time. And at the end of the day, if they have a judgment against you, the more time in court, the more legal bills for you. And then at the end, they can come and repossess everything that you had before. You see, that myth is just a delay in court, meaning that they can still go after all your assets when they go through the court. So that myth of not securing an asset is just a delay in court. And that delay can be a lot worse for you because first they will go after your credit and then they will put a judgment on you and go after everything that you have. And then last, where it gets even uglier, is that you used to have a business loan that reported on your business credit. But suddenly now you have something going against your personal credit. So you transferred that liability from your business credit to your personal credit, and you're screwed. You see, a very famous example is that of the former New York mayor, Rudy Giuliani, right? He had no secured loan against anything, but he had a judgment in court, and they went after everything he had. I'm referring to that Atlanta judgment where Rudy Giuliani accused two poll workers of doing voter fraud, and he was sued out of everything he had, right? So this is what happens with also an unsecured loan. The takeaway from that: regard every loan as the same. They will come after you no matter what, whether it is secured or unsecured. And finally, if you think that you need to learn more about business funding for you to make better decisions about your business, I put a link right here for you. Cheers.